Hello and welcome to the first Macro Monday of the year. I wanted to start off by hoping everyone had a good Christmas and good break. In New Zealand, it's obviously summer, so it's been great to be at the beach. We just dropped our new net worth tracking and aggregation tool. It's really feature filled. You can aggregate all your assets, income, and liabilities in one place, and it's got some great visualizations and automation tools as well. So you can track your like crypto wallets, you can automatically upload statements from different assets between funds, other brokerage accounts, and even private assets. So check it out. It's a great new feature, and we would love to get your feedback. But let's get into markets. So first, I thought we'd start off with the different components of the S&P 500 to see what the leaders are over the last month as we headed into the end of the year through that low trading period, and now we're obviously starting to pick up again, which is exciting. Before we know it, we'll be dealing with a long string of earnings, and that'll be quite exciting to see as we enter the new year. So the leaders of the start of the year have been materials, tech, energy's done okay, and you've seen kind of utilities and staples perform pretty poorly. So out of the gate, we've got materials doing really, really, really well. Obviously, that kind of correlates to some of the activities that we've seen in the markets with Venezuela and some of the large price moves in the commodity space. And there's been a lot of chatter from large institutions and smart money kind of starting to talk more about energy and healthcare. And I think my interpretation on that is that there's a lot of discussion at the moment around what's the next knock-on effect for AI. So it seems like a lot of the narrative and a lot of the commentary that you see out there is still very much focused on AI, and it's like, oh well, with the development in AI there for robotics is going to be strong, or healthcare is going to see more progress. And it's kind of like, how do I find another connection to AI to justify, asset appreciation and multiple expansion? But yeah, we've seen of the S&P 500, I think energy is something like 3% of the total index now. So, you're definitely seeing kind of some of these weighting dynamics play out, as well as a rotation into potentially new areas of interest. That being potentially energy and commodities, you could call it speculation. There's definitely been a crazy outperformance on the commodity side, while you've seen oil do quite poorly. So over the last year, oil's down 13.8%. However, silver's up 168%. So I guess we're seeing a continuation of that demonetization, anti-fiat currency trade. And then oil's kind of saying perhaps like there isn't too much economic demand in a sense, because why is oil so cheap while other assets have gone up? Copper, often an indicator for strong economic activity, is also up 100% over the last year, and uranium respectively up 85%. Now gold, there's been a lot of talk of gold. It's in the zeitgeist and the public, and that's up 68% over the last year. So commodities have been an interesting space for people, and we're starting to see that continue on into social media as well. A lot of fund managers have started talking about healthcare. I was looking and I saw this random strategy of movers in healthcare, which is appropriate for what everyone's talking about. And they haven't done too much looking into these individual names. I need to later, but they're on they're here. Interestingly, Pfizer though, while strong performance from a bunch of these, handful of these healthcare names, Pfizer's underperforming. So definitely seems like a hangover from the pandemic days, and it's still acting poorly, even though you're starting to see potentially a rotation into healthcare, but Pfizer's still a laggard. So that I thought was quite an interesting piece of information to digest. If I move on to this little application I was building over the break, it's the commitment of traders report. So it basically collects all of that data around traders and their behavior, and it tracks it on a weekly basis in the US. And what it does, it tells you basically how long speculators are and how long or short commercial banks are or commercial providers. So in the case of wheat, farmers are commercials in that sense, and then speculators are hedge funds, large traders, large accounts. So it's a good tool for indicating what side of the boat different groups of participants are on. So at the moment in gold, you can see, or in the S&P 500, you can see that as of the 6th of January, large speculators and commercials are relatively neutral, whereas as we went into the end of the year, commercials were short and speculators were long. And it's just quite an interesting piece of data, I think. I'm not sure to the extent of which it can be used. Oh, I think we might have an issue. No, we're good. But it's definitely quite an interesting data set to track over time. And I spent some time building this over the summer. And you can see that there's not a lot of commercial activity in Bitcoin. But at the moment, commercials are longer skewed towards Bitcoin, even though Bitcoin has been acting still very poorly, despite all-time highs from the S&P 500. So let's move on to some charts here. The US dollar, New Zealand dollar, it's been a really important dynamic that I think I look at all the time, because we spend so much money in US dollars as Kiwis. So we have to be really interested by this relationship. And the US dollar has kind of turned up again, starting to get stronger again after giving back and reprieving, which is ultimately, I think, a net positive for Kiwis, because if the New Zealand dollar can be a bit stronger, then we don't feel this great price impact when buying things in US dollars. So I think for local society, that I think my gut tells me that a stronger New Zealand dollar might be better for everyday individuals, perhaps. Micron. So we were talking earlier about this kind of dynamic of what's the next derivative of AI. A lot of discussion is now in the memory space. So you've seen a handful of these memory semiconductor companies do extremely well on the back of Micron, really, and some of their developments in the memory space. And then, other players are kind of seeing the benefit of that. And, over the last year, I think it's like a gain of 451%. So just an absolutely parabolic move on the back of the demand for RAM and these essentially the shortages they have. So they're able to push their prices up dramatically, which is bolstering earnings. So kind of a logical situation there. Bitcoin, my computer's acting quite slow, so hopefully this is working. Still kind of floating around that $90,000 range, has kind of been accumulating for a while, and despite other more risky assets and commodities being extremely strong, the relative performance of Bitcoin has been underwhelming. So to kind of finish things off here then and land, we have the S&P 500 closing at all-time highs, and we have a lot of uncertainty, obviously, with everything in Venezuela, but asset prices continue to go up, and we're still quite focused on the AI trade, but we're trying to find, or it seems like the market is trying to find other impacts from AI that then could seep into other industries. So lots of tension there. You're obviously going to see some shifts at the central bank with a new Fed chair. That's going to obviously have an impact on the bond market. It's going to have an impact rate on the Fed's fund rate. And then we really, as the government data starts to come through more clearly again after the shutdown, we're also going to get a better picture when it comes to inflation and the impacts of inflation. And obviously, if we're seeing copper go up 100%, gold, silver, equities are all-time highs, that is inflation. So we have relatively low headline number, but it's been sustained over a long period of time. But also, if we keep taking out different parts of the CPI measure, then are we getting a true representation of actual inflation? So I'll let you ponder that, and we will see you next week.